Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Okay guys, let's take a look again on the gold market as well. So on the Forex market, as we said today, well, it keeps the bullish sentiment, although we don't have the big action to the upside, but probably it is normal the pre-election session. So hardly today somebody will take some big activity on the markets just because everybody waiting for results and see what will happen. On the gold market, approximately the same story. So we see that market stands in a really tight range. This is some kind of the indecision performance yesterday, but I would say that it's not even indecision. It's some kind of just some pause before a major event. So this market just waiting what will happen. Here's performance, as we said, was really nice, and market shows the bullish action. And on intraday charts currently with the shape of this action, I would say mostly that this is some kind of the consolidation before the breakout. At least it looks like at this moment. What will happen after election result, we will see. But currently, technical picture suggests that its performance is more bullish rather than bearish. On the 4-hour time frame chart, if you remember, we said that despite great action, it is not yet the final bullish, confirmed bullish performance. It's just because market has to break this resistance. And we still have this long-term tendency of the lower lows and lower highs, and the market has to break it to make the challenge to pretend on something really more serious here. So in this case, indeed, we could say that our prediction could continue, and maybe even recall what we talked previously. Maybe even we could talk about some kind of the hand and shoulders here, some really major reversal that we are talking about in recent times, that investors probably will start to rebalance their portfolios on the drop of the confidence in the Fed. And so that's actually the topic that we discussed in depth in our Forex report this week. So indirect signs are bullish. So we have the breakout of the triangle, and we have this, as you can see, divergence. So here we're still watching. And the performance on the intraday charts, on the hourly chart, is also, well, stands more in favor of the bulls rather than bears. Particularly speaking, take a look what we have. Very slow and gradual action. And that reminds me mostly the shape of some flag or pin and continuation pattern. So it's some kind of the consolidation before breakout and around the neckline of, so we could call it on the probably double bottom on the hourly chart. So market is coiling around the neckline. This is more stands in favor of a possible upward challenge. So that's what we have here. Based on 4-hour time frame chart, you, for example, could suspect that this might be double repo sell. Let's take a look. Here we have 1, 2, 3, 4, 5, 6, 7, 8 bars, minimum required number of bars to the upside. Probably we have the crossings of the 3x3, supposedly. No, we did not even have the cross of the 3x3 right there. So this is first close below the 3x3. So and potentially it even might be the double bread and butter trade, and not the double repo. But even if we would have the cross here of the 3x3, based on the performance that we see on the hourly chart, this is not the way how double repo should develop. Here should be the actual capitulation of the bulls. Here we should get the strong downside continuation on the on the double repo performance, but instead of that we have the some overlapping candles, something of that sort, very slow gradual action. Besides, take a look here, we have signs of the bullish dynamic pressure. We have bearish trend by the while the price action actually is not, sorry, bearish trend of course, but we don't have the bearish type of action. Market mostly stands flat. This supposedly also stands in favor of possible upward action. Whether this upward action will be very strong or not very strong, how depth it will be is difficult to say, but currently we have the around 17 even the daily overbought. So an if extension will be by the double bottom pattern. Target will stand around 1720, maybe slightly lower. But the overbought probably will not let market to reach it within the 1-2 sessions. Probably will be more extended action. So we will see. But at the current moment, I wouldn't consider taking the short position. First, because we do not have any clear patterns. Second, is just because overall performance has more bullish signs rather than bearish. And I think that it's possible to wait and see what will happen with minor retracement. And maybe we consider taking the long position here, because that starts looking as a possible breakout, possible preparation for another leg up.